Welcome to Trading Lounge and the SP 500 for the 17th of April. So our weekly chart here is looking at wave 3 over here, an A wave here, 3 waves for the B wave, and up for the C wave to make wave B, and down for wave C here to make wave 4. Now this particular count here would see the market move much higher, taking out the top of wave B here, and there is a case for that. However, I don't really have any evidence for that except when I look at stocks like Amazon. However, we would, in this case, we would need to see that we know that the market's up in 3 waves here, and we know that this is the 61.8% retracement level at, say, 2900 roughly, and it's also where wave A and wave C have equality as well. So in terms of a bullish market, we would need to see support on the 3000 here for that. Now, at the same time, let's just go in and have a closer look at this here. So with the ABC correction here, and today we'll have a look at the NASDAQ and also the Dow Jones as well. So it does appear that we're going to be pushing higher through here. Now we can still have this here. I mean, I still want to stay with the possibility that wave C can be here. We just need to re-look at this particular structure here. As I mentioned, the 2900 here has got the equality between wave A and wave C here. It's also the 61.8% retracement level, so it looks like we're going to make new highs. So in terms of counting this up here for a C wave here, if I just go into here, we can count it up like this here. So well, I've got it as wave 1 and 2 here, but just imagine that it's wave A here, wave B here, and wave C here. So the equality comes in at 2900 here for the length of wave A here and wave C here, and it could be counted as 1 and 2 here, 3 here, 4 here, and then 1 and 2 and 3 and 4 and 5, just making a new high here, and then failing at the 2900 area through here. So yes, the other interesting thing, couple of interesting points here, is that on the NASDAQ here, so we've got wave A and B here for this, then 1 and 2 here, and 3 here, and 4 here. And then in this case here, we can see that the market has extended to the upside here for wave 5, which is 1 and 2 here, 3 here, 4 here, and then looking at wave 5 here. So between 4 and 5 here, we've got 1 and 2 here, and 1, 2, 3, 4, 5 here for third, fourth here, and going up for the 5th wave here. So it will want to try and get to 9,000, of course. And but the main point here is that we could view this here as the A, the B, and the C here. The reason I don't like that is the reason I don't like labeling it an A and a B and a C, but I'm doing it to be conservative, you know, because we need to gather more evidence that we're actually in a bullish market. And one of the things here is that, first of all, from wave 4 to wave 5 here, it's okay to have the extension in the 5th wave. It occurs normally in commodities more so than in stocks. Normally in stocks we get the 3rd wave as the extension. So this could also, you know, I've counted this conservatively here, but we can see that, first of all, that the NASDAQ has moved, well, it's moved above its 61.8% retracement level, where the S&P hasn't got there so far. This structure here compared to wave A here is longer. That's sort of okay as well, but this would tell me that, you know, this move through here, you know, is extending to the upside, isn't it? It's growing, so it's more likely to be part of a 3rd wave than a C wave here. But what we need to do is we need to allow this 1, 2, 3, 4, 5, and these 5 waves in here to finish. and then we need to see what's going to occur at that point, because if we get a corrective move after these 5 waves here, these little 5 waves moving up here, then we can confirm that we're in a bullish market at that point. So Friday and Monday in our bullish weekly cycle, we'll see Friday and Monday be bullish, and that's what we're sort of looking at the moment, because I can still see we've got further to push up here for these. The other interesting thing here is that when we're looking at this here, if I just go to maybe the hourly chart here. So yesterday we were looking for, we know that we had 5 waves down to this point here, and then we were looking for a B wave to here, or an A and a B and a C to the 61.8% mark, which is here. And then we're looking for a wave C to come lower from this point. Now, if I look at this here on the 15-minute chart here for a moment, I've got my 5 waves here, so that's cool. And then we're looking for some sort of ABC correction, and I didn't get that quite right either, but it wasn't the alternative count to pull back up into this space here. So we've got our ABC correction here. And then, I have to look at this here as wave C here, but it doesn't look like 5 waves here. But I must point out, when I look at the DJ here, the Dow Jones, it's A and it's B here, then we've got, it fits sort of okay. We've got 1 and 2 here, nice strong third wave, fourth wave here, a little bit of overlap here, and then wave 5 down here for wave C here. So in this case here, we've got our A wave, our B wave, and our C wave here, and then we've got this is a bit of a third wave moving up through here. This will end up having some sort of correction here somewhere, but then pushing up here higher, because this is third wave material here. These will be a series of 1s and 2s in here. So yeah, so look, this on the Dow Jones, we can count this quite nicely as an A and a B and a C. Didn't quite pan out the way that that we're looking at it, but it does present the case for this here. Now, technically, we can't really count this as 5 waves here, because it'd be 1 and 2 and 3, and then way up here for 4 and down for 5 here. But we could get a triangle pattern out of it. So just going into the tick chart here, I mean, just technically sort of getting it into perspective here. We could look at it as the A, B, C, D, and E here, and then wave C down here for this. I mean, that would probably be the way to count it. But whichever way we look at it, it's basically done and finished. And the other thing too, we were looking to go short here. We may have got trapped in here. And the other point here, though, is that Group 2 here has really held this, and that's what we normally look at when we're looking at the correction across any level. This is a minor level at 2800 here, and then we look at Group 1 above and Group 2 below to pin it to that. If we get the Group 2 as resistance, then that confirms that we're going down. And then support on top of 2830 confirms that we're going up here, and we will go up here. These are, I won't count it all out now, but I'll just count it here. We've got 1, 2, 3, 4, 5 here, so we've got wave 1 here and 2 here. This structure up through here overlaps this one here. So this is 1 and 2, this is 1 and 2 here, and this will be part of the third wave here. So this would be 1 and 2 and 3 here. There'll be some sort of, I can't draw here, there'll be some sort of that needs to go up a bit further. So there'll be a 4 and 5 here, so there'll be another correction at the 2850. So this is, if I looked at this, another way to look at this trend, just to make it simple, is that this is obviously the third wave here, so we can go somewhere in halfway mark here somewhere, I'll just put it at the 20. So we could say that somewhere in here at the moment would be the halfway mark here for this trend here. So we can really grab this length here and move that up into here. So we'll be going up into the 2900 here, the time it takes for Friday and Monday. So we need to be long here, obviously, and we'll be pushing up higher. So we'll probably have to revert back to, if I go back to this chart here and look at this as 1 and 2 and 3 and 4 and then 1, 2, 3, 4 and 5 here. And I know there's a problem with overlapping structures here, and but we do need to, what we do need to do is we need to allow this fifth wave here to finish up into the 2900 area here. And at the same time for that, as mentioned before, that will take the NASDAQ into 1, 2, 3, 4 here, and then 1, 2, 3, 4 and 5 and finish here. So it's been a bit of a laborious situation. You know that I've been bullish on the main structure of everything, but it's just a matter of proving it. And in terms of proving it, I'm still not there yet. I would still need to see the NASDAQ top out here and show us a corrective pattern. So this has been leading to the upside. So when we look at where's Amazon? So, and still Amazon still got further to go to the upside as well, because we've got 1 here and 2 here. Then I thought, I hadn't pulled this apart, but I can see we've got 1 and 2 and 3 and 4 here, and they're going up for 5. So we've still got this larger fourth wave here. And we've still got the fifth wave to go here as well. And I don't know if that's the end of it after that as well. We would need to see how that pans out, because then that could move higher there as well. But I know that, as I mentioned yesterday, this is not finished. This 5-wave structure is not finished, and that will be the same for some of the other tech stocks, which I don't really need to look at. But the banks are the ones that are slowing the S&P down as well. That's why it hasn't run as much. So if we look at a couple of those, say Citi and whatever pops up. So with Citi here, we can see that from the low here, we've got a 3-wave correction. So that's corrective. And this is pulled down. So an A and a B and a C wave here. And sure, this could get bigger and uglier here. But we should expect new lows to be made on the banks. This is an hourly chart for Citis. Let me find something else. I think I had Morgan's around here somewhere. Oh, yeah, there we go. Morgan's is the same as well. So we've got this. We can just see that this is corrective, and it's pulled back to the 100, which was the 38.2% retracement level from wave 2 top here. So sure, and wave 4, this wave 4 may get more complicated as it cruises across here, but it's still, at some point, it still needs to make a new low coming in through here. I need to pull this apart to find out where we are. I'm just pointing out that on the S&P, it's been lagging the NASDAQ, and the banks, the finance has been part of that. So, yeah. So really, that's about it for the indices as such. So, yeah. We can expect Friday and Monday to help us push up into the 2900 area here. And I know that markets, love big numbers, the psychology of it all. So it may even push up higher here. But the higher this pushes up here, the more it confirms. Because the other thing too, with the S&P, if I've got this as 1 and 2 here, well then wave 3 needs to be, it can be the same length as wave 1, of course. And it can even be smaller, but then wave 5 would need to be smaller as well. Wave 3 can't be the smallest. So, and I have to say I'm not happy with this count of 1 and 2 here is cool, but this 3 and 4 here is not cool. So this can still be building to the upside even here further. So if it's going to be a wave 3 here, the top's really not going to come in just on here. It's really going to be pushing higher up here. We need it longer. We need wave 3 to be longer in this case. So, yeah. So, yeah, I mean, really, we just need to wait for the NASDAQ to top out. That will be our guide stick. And for the S&P, we'll get to 29. And yes, you can be long. When it reaches these tops here, you'll see it start to correct at this point here, and then pull back and push higher from that point. Alrighty, thanks for tuning in. Cheers.